Hello, and welcome back to another episode of Not Fintech Investment Advice. Not Fintech Investment Advice means we are joined, as we typically are, by the wise and powerful Simon Taylor, author of Fintech Brain Food. Simon came on, as he always does, for a spirited conversation on a bunch of different topics, talking a lot about companies that have caught our eye in the financial services space. Somewhat unusually compared to previous episodes, we actually took a few minutes at the beginning of the podcast to editorialize a bit on the JP Morgan Chase open banking news. I'd followed Simon's writing and posting on that subject, but I actually hadn't gotten a chance to talk to him about it. And he, as usual, had an infuriatingly smart and nuanced take on the news. So we start with that before we get into banding about different companies that caught our eye. We cover a huge range of topics, everything from solving the administrative work of estate management for people who are grieving, an incredibly important and really interesting and emerging area within fintech innovation. The difference between AI trained on company policies versus trained by company employees. And of course, because we can't help ourselves, agentic commerce. We also try to manifest an idea for something we'd like to see in the fintech ecosystem that's a little different than what we normally do at the end of these episodes. So make sure you stick around for that. As always, was delighted to get a chance to talk to Simon. This is just such a great job, and I can't believe I get to do it. So without further ado, my conversation with Simon Taylor in Not Fintech Investment Advice. Okay, Simon Taylor is here. He's in Dubai, where it's very, very hot, but he is staying cool. Simon, how are you?
I am pretty cool right now. Certainly not as hot as the outside. I think maybe JP Morgan's lobbyists are setting the temperature out here and bringing the heat to some extent. But no, I'm very happy to be indoor and air conditioned with my good friend, the one and only Alix Johnson. How are you, sir?
I am doing well. I appreciate the kind words. Yes, I don't know if we're going to touch too much on open banking, but that is sort of the water that we're all swimming through right now, because it is the very sort of dramatic thing happening in the background. Simon, I know you've written and tweeted about it. Any quick hot takes on Chase and open banking before we get to our companies, as we always do?
I think sometimes market actors can do individually rational things and that make complete sense from their perspective, but are ultimately bad for the market. And this just feels like one of those instances. Like there's a movie version of what the banks are trying to do where everything they say makes complete sense. And yet, what's the counterpoint to that? Because right now, it's the FinTech Association in a Kentucky court trying to hold the whole thing back. And if that falls, I feel like, you watch The Matrix and Zion might fall and there's just this overwhelming force. Where's Neo? Like, where's the thing? Where's D-Hawk here? What's the thing that's going to make open finance actually happen? So it's kind of what I'm wrestling with. It's just like, I want hope in this story. Where do I get that?
That is very cinematic, Simon. Not that I'm surprised knowing you. I think that's interesting. I mean, it's well said in terms of it being something that's individually rational. And I think that's been my reaction and the reaction that a lot of people had, which is like, look, I get it from Chase's perspective. Like if I were in their shoes, I would probably be doing the same thing, right? But, you have to wrap the context around it, which is the rule, which is being sued by a trade association that Chase is a part of, that actually addressed at least some of the concerns that Chase had that they're now trying to address through pricing, which is kind of a blunt tool that doesn't always work well for solving other types of problems. So it's one of those ones that kind of defies an unnuanced exploration of it, because there are a lot of different angles.
So many.
I guess you could say that makes it a good topic for fintech
newsletter writers
like you and me.
Yeah, like
right.
it keeps us at a job. Like the one thing I think about is, and you and I were going back and forth on this on Twitter earlier, which is if there was any other type of API, then market forces would compress pricing.
Right.
If it's maps, if it's whatever, like if Google starts to up their pricing too much, there's an incentive for competitors to come in and undercut them.
Yeah.
But competitors can't undercut the data to my primary checking account. Like, that's not a commodity. There is one of them. So they have a market power that's very, very different to all of those other scenarios. So if your pushback is market forces will take care of the pricing, no, they won't. And that, I think, is why there needs to be something at the other side of the table. But that thing at the other side of the table needs to be not, this is free. You're going to have to give it away, and you got all of the liability and all of the problems, but also you're going to, and we're going to make you pay for it. It sounds like the beginning of a Trump negotiation, not the end of one, you know?
Right. No, it's well said. And I will, just to wrap up on this topic, I do think that you're right. I mean, the more I've looked at it, the more I've come to the conclusion that not including in the open banking rule the ability for banks to cover their costs with a modest fee, and banks not having a clear framework for liability, specifically for like payments use cases, those ones really were misses on the part of the Chopra era CFPB. And I think to a degree that sort of landed us in the situation that we're in. And I do agree that on the market power front, it's tough, right? Because you could envision a world where maybe eventually consumers get fed up with not being able to share their data, and some bank that says, hey, we'll never charge for sharing your data comes in and takes market share away from Chase. But you know, the US market, despite having 4,500 banks, is so concentrated at the top, and Chase has such a hold on its large corner of the market that I'm with you. I'm skeptical that market forces would be able to, at least in the short to medium term, really compress prices or bring competition back to the space. So TBD in terms of where all of this lands. And I'm actually glad we got to chat about that for a few minutes. But Simon, can we play our game?
Let's play. Yeah, let's play. I love this little bonus content that you got there. If you're expecting Not Fintech Investment Advice, this is still coming soon, but a little bonus content for you, everybody.
Exactly. Would you care to go first as the smarter and more handsome of the podcast hosts on this episode?
Neither of those things are true, but I will happily go first. The first one is possibly the most Alix company I've ever come across, not least because the company is called Alix, Alix. And this is making the horrible work of settling somebody's estate once they passed away just that little bit easier. So they help families settle the estate of a loved one who's passed away as a service. So they'll do things like find and cancel subscriptions, define any unhandled tax obligations or debts, and even help you take control of accounts, transfer titles or deeds to property. And my mom has had to do this for some of her late brothers, for her parents. I've seen people go through this process. Quite fortunately, I've never had to do it myself, but I know it's incredibly administrative. And when you're already grieving for somebody, the last thing you expect is a lot of admin that makes tax season look easy. This is admin plus pain. And it's horrible what we put people through. And it's a lot of hidden pain, which is the ideal use case for AI. Like apparently the founder of Alix built the company after spending 900 hours trying to settle a family friend's estate, which included hours on hold with utility companies, chasing death certificates, and trying to understand legal forms that just make no sense. And in that process, she found a system that, like, AI fixes this, right? Like, this is the perfect fintech thing, but also it's got some soul. What say you, Alix Johnson?
Well, first of all, great name. Fantastic. Even if it's one letter off in terms of being perfect. I really like this idea. I think it makes a lot of sense. And actually, there's been quite a bit of fintech innovation in this area, right? Kind of everything from helping sort of older consumers kind of get their estate or get their financial situation kind of ordered and settled, to obviously kind of everything that comes after someone dies, which is, as you said, an emotionally difficult time already. And I think you framed it exactly right. I mean, the last thing you want is horrific amounts of administrative work layered on top of what you're already going through. And, the other thing I think that's really important about this one is, I'm trying to think of the right way to describe this. There's a set of things that you only ever do a couple of times in your life. And so you don't ever get like reps at it, right? And I think those are sometimes the hardest things. No, I mean, and like I'm being slightly maybe glib in the way I'm describing this, but
no,
like,
but I get it. It's like, how many times do you buy a house? I mean, some property flippers, but yeah,
exactly. Yeah, I mean, it's like there's a set of things in your life that you're only ever going to do like once or maybe twice, and probably those things, because you don't do them very often, are also going to be very difficult and filled with administrative work and filled with choices that you don't realize that you're making. Like, they are high stakes, complex, and you don't ever get any practice at doing it. And so I really like the idea of distilling down, particularly with the help of AI, almost like, here's like the best practices for doing this. There's like, and making it very clear to customers, there's no reason why you should have any knowledge of how any of this works. So don't feel bad that you don't know how this works. Don't feel like this is something that you should have to avoid until you learn how it works. Like, we are here to hold your hand every step of the way and give you a roadmap for doing this well. I guess the question I would have on this one, and it looks like they kind of have a combination of like humans and AI. So there's a little bit of blending of the two in terms of like, you as someone going through this have someone to talk to and kind of a point person. And then there seems like there's AI and kind of workflows behind it. I guess the thing I'm curious about is distribution, because one of the things that I've been seeing a lot of, and there's another company that kind of is in this space tangentially, Careful, who released a product that's like a digital vault that I think is supposed to kind of address some of these challenges as well. They take the approach of kind of embedding their services and their offerings through banks and through wealth managers. And the idea is basically that like, there is a generational wealth handover that's going to happen. And, you should try to help build the bridge between one generation and the next. And that from a business customer acquisition or customer retention perspective, that can be like a very powerful business opportunity, in addition to obviously helping people going through something that, no one wants to have someone go through. Do you have any sense of how they're planning to get to market? Because obviously, I mean, I think this is the type of service that, product-led growth would drive a lot of people to find them. But any other insights into that?
Yeah, my understanding is this is very much direct to consumer is the play.
Yep.
And it would track, because one of the lead investors, Lauren at Acrew, was one of the lead investors in Chime, and is a big believer in consumer, and that it's kind of became unfashionable for a while in fintech. Everybody wanted to be B2B, everybody wanted to be infrastructure, but consumer is where the really big wins often end up. And so can they build a brand? And if you look at the website, it is very, very consumer friendly. It's all in pastels. It's very, very gentle. But they actually go deep as well. I mean, they tell you everything they're doing. The flat fee of $249 is a full discovery, and that can be including that discovery is contacting banks, hiring CPAs, and notifications, requests. Like, they're doing a lot of stuff. And I suspect AI is helping them, but I also think it's somewhat concierged. And time will tell if that's, how many people is this happening for, times 249, like what's the ROI calculation on that? But the distribution one's an interesting question. Where do you do the Instagram ads for this? Like what ads do you buy to scale this? Because Chime famously really did a great job on their marketing. and figured all of that out. And yes, there was a lot of product-led growth, and still word of mouth and referral is a big piece of what they do. And same for a lot of the consumer brands. SoFi went the other way. SoFi's got its name on stadiums and kind of those are valid approaches to get consumer mind share, and neither of them are wrong, but I don't think either of them work for this. So I do wonder what discovery looks like.
Yeah, I mean, it's to your point, the website is very well done. It's very like approachable, gentle, not scary in any way. But I do think it is a challenging thing to market, right? I mean, like this is one of those things that is extraordinarily difficult to build brand awareness around, and human beings have a tendency to not like to think about bad things happening, and so I would imagine there's a lot of like just in time product market fit, unfortunately, where it's like this has happened and now you need help, which maybe is fine. Maybe that's the path that people have to take to get to a service like this. But I do really think this is a great example of it's adjacent to a lot of financial services, right? Whether it's payments or wealth advising or tax advising, it's adjacent to a lot of financial services products, but the core problem that's being solved, as is so often the value with fintech, is administrative work and like lessening the administrative work and giving you best practice and guidance and a way to work through it. And so I really like this, and I would not at all mind, and this kind of goes back to a thing you and I talk about a lot on the show about, is this a product feature? Is this a company? I mean, I wish this company well, and I hope they do extraordinarily well. I also wouldn't mind this becoming a feature of a lot of offerings in the industry. Because like more help for this model being scaled up for consumers, I think would be great for everyone, right? So I would not mind this one inspiring a lot of copycats or a lot of people kind of following in their wake, because I really like this as a product.
Do you know, I was just looking at the website, and Alexandra, the founder and CEO, she has launched and scaled more than half a dozen successful multi-channel consumer brands.
There you go.
So there's some experience here. And whilst in fintech it may not be the case, there has been a renaissance of direct-to-consumer brands lately. And so, who knows? That could be that you've got somebody that's done it before, knows how to get market access in different niches and consumer brands in niches. It could be a thing.
Yeah, I mean, I think to put a capper on that, I do think that a lot of things are just a function of what the founding team is good at, right? Like sometimes we overcomplicate these things with like drawing on a whiteboard and what's the optimal strategy. A lot of the optimal strategy is just, look, I know how to do this. It's kind of an art. There's sort of just a feel for doing it well. You have to know certain people in the industry. Like some people are just good at certain things, and that should determine the strategy for the company. And I think B2C acquisition is one of those things where like it's a lot less science and a lot more like art, and you have to have the right people with their hands on the levers. And it sounds like that's the case here. This is a good one, Simon, and very Alix-y in a lot of different ways, as you said. So I appreciate you.
Are you going to hit me with an Alix-y one or a Simon-y one? Let's go.
Oh, all right. I'll start with the Simon-y one. And I actually had to do quite a bit of research on this one to make sure that we hadn't talked about it before, because we've been doing this show for a while now. And
I have definitely, I'm pretty sure, done a duplicate for fintech company once and nobody noticed.
Yes, I mean, if we've done this before, I tried to do my research, but if we've done this before, forgive me. But I do have like a specific thing I want to talk about with it. The company is Narrative, and they are an AI for compliance company, Simon. So I bring to you, I'm like a cat bringing a mouse to you, right? Like this is like, I know you're going to like this. This is just like right up your alley. Like, here you go. I'm going to drop this right at your doorstep. AI for compliance, something we've talked about a ton. And the general premise for any AI for compliance is that LLMs are flexible enough in their ability to understand context and flexible enough in their ability to monitor and to learn from really great humans who they might be riding shotgun with, that they can take over a lot of drudgery and work that is just really difficult for human beings to scale, aka pretty much everything that happens in compliance. We've talked about this with numerous other companies before. With Narrative, there are two things that stand out about them that I thought were interesting. One is they are very, very focused, I think, as anyone doing kind of verticalized AI should be, on tuning the large language model to the specific company that it's trying to help, right? And the way they describe this is sort of labeling specific data sets that can be used for fine-tuning the model, specific to not only like the industry or the use case, which is obviously compliance in financial services, but the specific policies and data of the individual company. So trying very hard to make it tailored and not relying on, just sort of the generic magical reasoning capabilities of large language models. Very important. And then the other specific use case that I'm sure this is one that others have worked on, we've probably talked about it before, but it's just been kind of stuck in my head recently, is specifically reviewing customer complaints. And the reason I wanted to talk about that one, Mr. Taylor, is I've been doing a lot of work recently in the US on trying to help fintech companies and banks kind of think through and game out, what does it mean that the CFPB is becoming completely defanged, right? And what do you do? What do you do in this environment? And the general takeaway from everyone I've talked to is that it's actually going to be a huge disservice to your organization if you in any way try to lessen or reduce or take advantage of this sort of gap in federal consumer protection supervision and enforcement, right? Like you need to just stay the course because states are going to step into the void. There's going to be a lot more private litigation that's going to like step into the void. So like you are in no way clear on any consumer fairness, consumer protection stuff that you were doing before, just because the CFPB has been sort of weakened. And in fact, a lot of what the CFPB was doing operationally was kind of helpful, I think, to financial services companies in figuring out like, hey, here's where we have a problem. We need to invest here. And consumer complaints were one of the ones I was thinking about. And so I'm curious, I wonder if the right strategy for financial services companies is to invest even more in trying to proactively manage and resolve consumer complaints, and to do so directly and to try to do so well before consumers feel the level of frustration where they have to go to the CFPB or they have to go elsewhere. And I think that actually might, in the short term, be a really smart investment of time and money. And what Narrative, one of their primary use cases is basically being able to review consumer complaints.
Yeah.
Obviously, these are like narrative, hence the name of the company. And so you have to be able to parse natural language to understand what's happening. And then using that to not only draft responses to consumers and to try to resolve the specific complaints, but then to also prioritize fixes or identify systemic problems in your organization that require like prioritized resolution or redress. So I really like the idea of investing in infrastructure to handle consumer complaints and use that to sharpen up your business. And in some ways to kind of use the next 4 years as a window of time to invest in better infrastructure here, because Simon, I just have this lingering feeling based on what's been happening recently that 4 years from now, consumer protection is going to roar back in a really like maybe overly aggressive way. And the companies that aren't prepared for that from an infrastructure standpoint will actually be behind the curve. And so that's what kind of stood out to me with Narrative. What say you?
Yeah. While the cat's away, the mice will play is not a good strategy if you're regulated.
No.
And while the cat's away, the cat's got to come back with some freaking lions and eat you. Like So completely agree on. Yeah. And I think a lot of financial institutions know this. And I think the other concern that when I speak to financial institutions is, and the alternative to the CFPB not having fangs is 50 different states have opinions, and some of them do, some of them don't. And which one do I listen to? And any one of them could just go rogue on me. And some of them feel that they need to pick up the mantle for consumers, even though it might be outside of their specific jurisdiction. They're going to say, well, for our specific, so your complexity went way up. It's complaints for New York versus complaints for Kentucky versus complaints for, my goodness. So if nothing else, you potentially have a much more active set of state regulators. Your complexity has gone up in the short term. Your cost has gone up in the short term. Your manual work has gone up in the short term. And in the long term, it could be even worse. But using AI to address that would have been potentially quite difficult under the previous administration. I don't think it actually was, but I think it was perceived as difficult.
Yeah.
Everybody took staff reporting paper 11-7 as meaning I can't use AI. And what it was actually saying was, tell us how you're using AI.
Yeah.
Put that aside. Because everybody's worried that the regulator won't allow them to use AI because it hallucinates I'm doing bunny ears. Then there's a real risk of using this stuff anywhere, never mind complaints, which are a highly regulated, concerning activity. I first saw somebody do a demo of using LLMs to manage UDAP violations, I want to say 2 years ago. And what was interesting is getting it to behave consistently was actually really difficult. You could get an LLM to take the UDAP rules and review everything against it, but sometimes it came out with a different answer from the same input.
Yeah.
Now, humans do that too, but we
have more tolerance for humans screwing stuff up like that than we do machines. That's the reality.
Whereas I think what Narrative have done really well here is they have not only custom tuned it, but it looks like they build a custom model. So they do some deep institutional learning. They learn your workflows, policies, procedures, and the decision patterns of your best people, which interestingly, from experience, is what we're doing much more of now at Sardine, which is, yes, it's one thing to take the policies, but what you really need to do is be constantly watching what the people are doing and taking those outputs to feed what your policy is, which frankly is what most institutions do, because the written policy might lag what's actually happening on the ground by 12 months because risk is always changing. So the lived policy is alive.
That's a great point. And I apologize for interrupting, but I just want to hammer the exclamation point on that. There's a huge distinction between policy and what your best people do. And we've all experienced this, right? You hop on the phone with a customer service agent, and the policy at the company for whatever the thing is you're calling in about is A, but depending on how the interaction goes and who you get, your outcome might be B. And the best customer service agents understand the policy, and it's sort of written for the lowest common denominator, but they flex the policy in ways that drive the best outcomes for the company and its customers. And in this case, from a compliance perspective, they flex the policy in a way that drives the best outcomes for the company and its relationship with regulators, right? And so I think to just layer onto your point, having it learn from not just the policies, which is kind of where all these things start. We ingest all your policies. This is great. Well, okay, yes, but the policies are the lowest common denominator definition of how to do this. What we want are not, interns that are aping our policies. We want scaled up compliance professionals that act like our best compliance officers. And so I do think that's just such a critical point, and it's one that candidly I hadn't really thought about in those terms until we were just talking about it. But I just wanted to underline, I think that's such an important distinction with this stuff, is the distinction between the policy and the person.
I think that lived experience of having implemented this a few times is really shaping a lot of what you're seeing in the market. I need to go back to, because we were writing the agentic oversight framework document. Right. I want to say we started that 12 months ago and it went live 6 months ago. And after having been in production for a long time now, this is consistently where we're getting the best performance. Sardine's more data science oriented in that sense. But this team Narrative are former chief compliance officers who've lived through those examinations. And so that lived experience is really starting to shape things. Shout out to these guys. I think one, website's beautiful, really clean,
It is.
really simple. And they've gone after one problem and they've really stuck the landing on the buyer narrative of the narrative, right? Like if you've been through and had to deal with UDAP violations and complaints, there's a lot of nuance in this website that says they've been there too and they understand it, and that has credibility with the buyer. And I wonder, I think there's still a lot of, especially sponsor banks and more innovative banks that have got scar tissue from the last administration, thinking the ways you described, which is, okay, the cat's away, but I'm going to use now to invest ahead of this and put innovation into my operational stack because I don't want to have to hire another 300 compliance people next time something goes wrong.
I think that's right. I mean, I think the smartest companies, which is to say oftentimes the ones with the most scar tissue, to your point, they invest countercyclically, right? Like that's always the smartest thing to do. And so it's like, when the credit environment is really great, that's when you invest in collections. When the compliance environment is really loose, that's when you invest in compliance, right? Like you invest when you don't need to, so that when you need the stuff, it's already in place, it's scaled up, it's ready to work. And I have this really strong feeling, just based on everyone I've talked to and everything I've seen, that a lot of these compliance issues that have kind of gone somewhat dormant are going to roar back ferociously 4 years from now. And I think the other thing that we should also expect is, all right, if you're the CFPB and you're trying to like rebuild yourself into a force that can sort of reclaim the mantle of protecting consumers, and your staff has been reduced and you don't have as many resources, what's going to happen, Simon? They're going to use AI, right? And so like, I think anyone in the industry should also be anticipating, look, regulators are not going to just, do manual versions of supervision and enforcement forever. They eventually adopt technology too. And there's going to be a real incentive sooner rather than later, given everything that's been happening, for regulatory agencies to embrace a lot more technology. And the best way to deal with that is to have your own technology in place as well. And I think the future of a lot of this stuff is going to be machines talking to machines, not just between companies and customers, but between companies and regulators. So I think this is definitely skating to where the puck is going.
Long overdue. Regulators need help. They are drowning too.
We've tried to manifest things in that area before on the show. Mr. Taylor, give me your second company.
This is Ogment AI, so Ogment. They are the MCP server for commerce. So if you're not familiar, the model context protocol is like the APIs for AIs. It lets you plug in different tools and capabilities to your large language model or somewhere else. And if you don't have Google Docs access, Google Docs would have an MCP server, and then you will be able to plug that into Claude or ChatGPT, and now you've got Google Docs. And what's powerful about this is it's an open standard versus tool use where each LLM integrates with each tool a little bit differently. So what does Ogment do? They help brands make their products shoppable on ChatGPT, Claude, Perplexity, and DeepSeek. It helps merchants who are selling products take more control of that customer conversation, and then actually start to increase conversion, and track queries, track customer intent, run analytics on those customers. So they get all of the stuff that they have today as if they were arriving onto their website or into a mobile app. You can almost see MCP or large language models as another channel if you have an MCP server. MCP servers are the way in. So Ogment is trying to be, if Shopify was the canonical platform for e-commerce, then Ogment wants to be Shopify from the model context protocol era. There's a real clarity to their pitch and to their offering. And there is sort of, when I speak to payments nerds, like if I'm going to start a little online store in the future, I'm going to need my own MCP server, just like I'm going to need my own website. Like that's sort of out there. The tech nerds will tell you MCP servers are really insecure and they're full of holes and they're full of problems, and they might be right. Maybe this thing dies. Maybe it's not the answer. What I liked about it, though, is that Ogment's done a really good job of packaging this, defining how those servers should work, how they interact with all of the existing systems that a merchant might have, like their inventory management and their customer servicing and their shipping. They've really put a lot of thought into what that should kind of look like. And what I got from this was like, I don't know if this company's the thing. I don't know if model context protocol is the thing. But something like this eventually is going to be like, yeah, like it's going to be interesting. I wrote a couple of weeks ago, like, I can't figure out if we're in the WAP era, the feature phone era. I don't know if you had a WAP capable phone, but I'm definitely aging myself here. But Nokia had tap to pay in the early 2000s. They had click to pay in the early 2000s. Like, all of this stuff existed. It was just really slow and really ugly, and nobody did it. And I can't figure out if we're there with agentic shopping and agentic commerce and that whole thing, or if it's going to accelerate really quickly and we're going to get the App Store moment, the Apple Pay moment. Like, are we going to get something that crosses that chasm? I don't know. But when we do, which eventually happens, whether it's in 1 year or 10 years, something like this will exist. That's why I found this one compelling.
Yeah, no, that makes sense to me. The thing that I'm really curious about with this is, I'm trying to think of the right way to describe it. Let's use Shopify as the example. E-commerce and this idea that Shopify sort of popularized of like arming the rebels was specifically kind of put in place as a reaction to merchants' sort of aversion to trying to sell through Amazon, or Amazon just sort of eating all customer acquisition, right? That was the whole concept was, hey, Amazon has aggregated like all consumer demand for e-commerce. They added the ability for third-party sellers to participate through the Amazon ecosystem, but merchants were understandably reluctant to just trust Amazon to like own that front end experience, to not front run them with their own products. Like, there's a whole set of concerns that you logically have as a merchant if you're surrendering 100% of like customer acquisition, marketing, brand building to this giant retail storefront and, just being sort of the back end fulfillment partner. And so Shopify comes along and says, hey, like, we're going to arm the rebels. We're going to give you all the tools you need to compete on the front end if you want to the extent that makes sense for your business. I'm curious, Simon, what the equivalent to that is in the world of agentic commerce, right? Because, on the one hand, you could say, and I've actually talked to a number of companies that are thinking this way. They're like, look, we just need to follow the customer. And so if the customer is migrating from search to chatbots, and they're now trying to shop within chatbots, we just need to do whatever we can to make our products easily accessible through those chatbots, right? Hence, model context protocol, hence making that data visible to these chatbots and just facilitating that process. However, I am curious if that model is kind of like the Amazon third-party seller equivalent, where it's like we are giving up all of the control over the front end experience. And, it's always kind of funny, but it's like things that are beneficial for consumers are sort of bad for merchants, and things that are good for merchants are to a degree kind of not great for consumers. And there's always this sort of tension that exists between the two. And I think agentic commerce and chatbot based shopping experiences for consumers are really powerful, right? Because it can be like super personalized. You can compare prices. Like, you can do really great things shopping for products, but it also makes the companies supplying the products potentially more sort of fungible and interchangeable in a way that they might not totally enjoy. And so I don't know if you have any thoughts on like the tension there or how it will resolve itself, but every time agentic commerce stuff comes up, I sort of wonder about analogs to earlier areas and like how merchants will react to this. Do you have any sense of like how a merchant, a a reasonably sophisticated e-commerce merchant would think about that question?
AI labs have a lot of funding, and
Yes, they
they
do.
are now.
More money
There's
than God. I
rumors
mean,
of
really, like ridiculous amounts of money.
yeah, and certainly ChatGPT and OpenAI have been pretty transparent about their revenue numbers as well, which is fascinating, and their
Yes.
burn rate. And so while they're losing money, they're not losing a massive amount of money. And I think a lot of people in AI are losing money right now, and
Oh, yeah.
these revenue growth figures are distracting you from the fact that for every dollar they're making, they might be losing $1.50, maybe even $2, maybe $3. Who knows?
Totally.
God knows where their burn rates are. And look, burn is fine if you're early stage, but I think there's some like .com bubble stuff going on.
For sure.
That aside, there is a lot of focus and attention trying to solve agentic commerce at the biggest payments companies, at the biggest AI labs. Merchants aren't spending nearly as much time and attention on this as people that would potentially be eating their customer interface are spending on it. And not just in cash, but in terms of cycle time, like in terms of focus as an organization. That's a threat. That's a genuine threat to your relationship with the customer. But as a merchant, I could just choose to view this as another channel. And the choice is, do I want to own that channel or not? And a lot of big companies sell on Amazon and they own their channel and they go direct to consumer. And so I think a lot of merchants are experimenting with WAP and feature phones and trying to sell commerce on there. And this is one of those where your downside risk is you learn something. Your upside is you maintain some meaningful level of loyalty and relationship with your customer, even when it's via an LLM. What I think we haven't figured out yet is what's the revenue model, what's the quid pro quo, what's the incentive alignment between the merchant, the consumer, and everybody in the middle. Because in the e-commerce world, it's ad marketplaces. That became the whole universe. What is it for LLMs? Is it ads? Is it something else? What is that bit in the middle?
It's a great question, right? Because like the from what I've heard of some of the big AI labs, they are like investing, to your point, in commerce, right? They're bringing people over from Instagram and Google and places that understand how to monetize channels for commerce, essentially. And I could easily envision a world in which advertising sort of worms its way into these experiences, right? And this just becomes another advertising channel. You can participate or not, and it's kind of up to you. I think the other thing that I wrestle with a lot on this topic is I'm trying to think of the right way to sort of frame this. There's a set of things that consumers value, and some of those things are easily quantifiable and some of them are not, right? And so like price is something that's easily quantifiable and something that an LLM could help you find the lowest price for this thing. A lot of commerce, particularly B2C commerce, consumers, the decision factors are much more like ephemeral, right? They're based on brand. They're based on reputation. They're based on a perception of quality. They're based on storytelling. And, I think that one of the main reasons that merchants have tried to hang on to some direct to consumer facing brand assets is they don't want to let go of that. And they don't want to let that sort of slip away from them. I wonder what the equivalent of that is in an LLM context, right? Because in some senses, you could imagine an LLM actually being pretty good at understanding nuance and storytelling and brand and conveying that to customers. But I really do wonder, and it kind of goes back to Ogment and the MCP approach. I wonder how much context you can pass along through these sort of APIs for LLMs that allow customers to make more nuanced decisions about who to shop with and where to shop for, and how much of it just gets compressed down into price, inventory, availability, shipping, easily sort of quantifiable factors. And that would be another thing I would be trying to kind of think through or potentially solve for if I was building in this space is, LLMs have the power to convey a lot more meaning and differentiation from merchants than just pricing and some of those things that we tend to see as like the points of comparison in an e-commerce context. And I wonder if it could be a richer experience, if that makes sense.
Yeah, a lot of my use cases are actually researching trade-offs between products. And I was literally, I was buying a microphone earlier because I forgot to pack one and I wanted better audio quality whilst I'm on the road. And I was standing in the store in the Dubai Mall, and I got the Gemini Live feature, and I asked it. I put the camera onto the to the item, and I said, what do the reviews say about this microphone, and what other microphones are available in the Dubai Mall? Give me all of the trade-offs of price, quality, and convenience. Is this a good price for what's available in the Dubai? Yada yada yada. I gave it all this criteria, and it came back with, what you're looking at is this product with these features. That's actually the best price they've got in this mall from certainly what I can find online. You're good to buy this thing. It's going to perform extremely well. And the shop assistant was listening to me, and he was like, whoa, that was really cool.
Yeah.
That
I mean, it's like touching the future. Yeah.
That was like a moment, because like, how often do people walk into the store and do like a live demo of AI for them? But Gemini's live feature is out of this world if you've not used it. It's really, really cool. But this is what we're all using LLMs for. We're just typing, right? Like, that's already happening. That research feature exists. So how's your brand showing up there? I know your differentiators understood by the LLM. Is it able to make the argument for you, or did it just hallucinate some crap,
Yeah, I mean, how well can the LLM represent your brand to the consumers it's interacting with? Like, that to me is the absolute key question in this space, because brands invest a ton in competitive differentiation, but it only matters if it translates through the channels consumers use to find these products. And I it's such an open question in my mind about how that's going to work in an LLM world. And so I'm deeply interested in Ogment. I will keep my eye on them. Simon, can I give you one last company?
Please do. I would love that. I would love that very, very much.
Well, here you go. So Solo is the name of the company. And they are essentially the way I've been kind of thinking about them, and I've gotten to know the founder and CEO fairly well, and have had a lot of conversations because it touches on areas that are very key to my sort of worldview. They're kind of like a new school credit bureau, right? So the idea is that if you think about the history of the credit bureaus were successful
this is
because
Solo One, not Solo Funds.
Yes, to be totally clear, not Solo Funds. No. Solo.one is the URL. Thank you for that clarification. Very important. Basically, they're trying to build a modern credit bureau that can kind of create efficiency and data assets out of non-standard or contextually dependent data, right? So the idea is basically that the traditional credit bureaus focused on repayment data outputted by loan servicing systems, because that was a really structured data set that they could easily build data products around in the 1980s and 1990s. However, as we all know, there's a whole bunch of different types of data that are used in underwriting, particularly in commercial and small business underwriting, that doesn't fit neatly into a credit file, right? It's income statements, tax statements, different forms of like corporate identity documents, like all of these sort of PDFs that lenders that deal with more complex loan types are drowning in. And there's no mechanism to standardize that data, validate that data, add context to that data, because there's a lot of different ways to interpret it, right? When you read a commercial bank transaction statement and you're looking at all of the commercial transactions for a business and their bank account, there's a million different ways to add up, like, what is their income? What is their revenue? Like, there's just a million different interpretations of the data. There's not one. And so what Solo is building is basically the infrastructure to help standardize those different data elements that don't fit neatly into a traditional credit file, and then make those available for reuse, both for the end customer, so that they can have sort of think of it as almost like a passport that they can take from one lender to another without having to redo everything every single time. And for the lenders, being able to reuse or easily repurpose this data so that I'm sure you've had this experience, Simon. You go to a bank one time and you enter in a bunch of data, and then the next time you go to the same bank, you have to enter in the same data again, and there's no memory or persistence for that experience. They're trying to solve that on the lender side. And then the last piece, which is tying back to our discussion at the beginning with JP Morgan Chase, is they are trying to create economic incentives so that the lenders that do the verification and initial capture of this data can get economically compensated when other lenders build on their verification work and the work they've done to build trust with the customer. So it's kind of a reimagining of both the economic model and the sort of technical infrastructure of credit bureaus, but in a very like modern context to address some of these lending types that weren't well served by the traditional credit bureau model.
Yeah, I mean, on that last point, of course you start there. Of course you start with the lending types that aren't well addressed, because otherwise you're facing the existing credit bureaus head on, and you've got to deal with existing workflows inside existing institutions. And now I've got a rip and replace question. I've got a, well, how do I run these side by side? And how do I change my operations? Whereas, oh, you're just going to add a new credit product? Why don't you use this so that you only have to ask for documents once? And then if you add new products, you use this too, and you only have to ask for documents too. Oh, and by the way, you're joining this network where some of those documents, the consumer can just push them to you from where they've been seen before. And so the interesting question is, can they get enough network effect for that to drive itself? And to start to become where the real value is versus the initial value, which is ask once, and then you don't have to ask again. And there's a bunch of clever AI stuff that makes sure that when you've asked, you've saved a bunch of manual work. There's a lot of folks doing that in the credit process, but they're not doing it plus, sharing it across your internal silos and across organizations. If I've understood that right, I really wonder, like, what's the kindling that makes this successful where the other bureaus have failed? And I think there's possibly nobody in the world better placed to answer, like, what's going to be the make or break for this than the one and only FICO watcher himself, the Mr. Alix Johnson.
This is an area I pay attention to, and I think you're right. I mean, I think the trick, and it kind of goes back to what we were saying earlier about the person and their skill set needs to be well suited to the task at hand. I think in this particular case, it's a lot about partnerships and finding the right companies to work with to bring this to life. Because I do think, to your point, it solves a problem on a narrow scale, right? Like, hey, we can just make the process of you uploading documents, parsing those documents, and extracting contextually relevant insights from those documents for commercial loan underwriting less painful. We can do that better than what you're doing today. So if you're a commercial lender, you should just sign up with us, because like, we're just going to make your existing commercial application entry and underwriting process 10x better than it is today. And to your point, for certain types of loans, especially on the B2B side, there's so much fat there that can be trimmed that you really can, especially, and Solo does leverage LLMs and AI to help sort of with that efficiency and translating documents and taking them in. There's a lot of value you can just add there. The trick is then, how do you build up that network? Okay, we're doing this for this one bank. That was great. But like, how do we tie these pieces together so that the data becomes modular and it can be passed to other lenders, and we have an economic model in place? And that is where, and this is kind of the more company building side of Solo, but like, their major investor is Bank Tech Ventures, which represents a bunch of small banks, right? So they chose a specific venture capital firm as a partner because they could bring a lot of banks to the table and introduce them to those banks. So that's one step in the process. Another step in the process is, trying to find partners to work with more on the kind of analytics front. So we have the data, we're a credit bureau, but the credit bureaus wouldn't have been nearly so successful if they hadn't found partners like FICO to work with to sort of layer analytics and meaning on top of what they're doing. So there's a whole partnership angle. There's, even little things like, are you learning from the past in terms of how to construct consortiums where the economic models all work? And so if you're thinking about like parallels in the traditional banking world, like what can you learn from early warning services and the early like consortiums that they set up and how they work? So I think a lot of the answers to your questions, and this is probably a bit of an unsatisfying answer, depend a lot on the sort of art that goes into building those relationships. Because I think what takes you from 0 to 1 in this is, we're solving that problem for commercial lenders. But what takes you from 1 to 100 is, are you putting the chess pieces on the board in the right place so that network effect can start taking root?
So what you're saying is it's annoying, squishy human relationships that are going to be the deciding factor?
No! It is! No, I know. It kind of defies, again, I wish I could just draw all this stuff on a whiteboard, man, but like the more we talk, and I guess even though we're not giving investment advice, we are sort of learning the same way VCs probably do over time, that like a lot of it is a bet on people. Yeah, I mean, it really is.
It's the people.
I think this is an example as well.
There's a little troll part of me going, maybe launch a token, maybe an ICO. Maybe there's some tokenomics here that should be the thing. They say, hey, if JP Morgan can launch a deposit token, then anything is possible.
That is absolutely right. It's not a stretch to see how this could apply in a crypto context as well, because there is this, again, the underlying asset I think that they're trying to build around is trust, right? Like how do we productize trust and make it so that it's an asset that can get passed between different parties? And I think about that question a lot as it relates to everything in the crypto ecosystem, right? Because like it's decentralized, it's sort of trust built into the technology. But for certain use cases, you want something beyond that. Like you want to understand the reputation of the different participants in a network. You want to understand the history. And so I do think there actually is some applicability for this type of infrastructure, not just in traditional finance, but in some of these new realms as well.
Let's see, man. All right. Is it manifesting time?
It is manifesting time. I will let you go first.
Okay, so I'm going to manifest the Timothy Chalamet of fintech. And the reason I say this is because I watched the new Dylan movie, and it is really good. It's really enjoyable. And I was thinking back to his Oscars speech where he's in the pursuit of greatness, and it was almost a contrarian that somebody was trying hard to do something good. And as I look at things like crypto trust companies going public every single day, as I look at people using AI to pick stocks for them and then just letting it go wild because screw it, man. Why not? As I look at the rise of sports betting and that sort of as a default, as I look at just, hey, it's everybody from themselves, screw it, we're all going to die somewhere. Just that prevailing wind just feels wrong to me on an instinctive level. And don't get me wrong, I am a free marketeer. I am quite capitalist. I lean center-right, I think, politically. And yet that doesn't fit with my soul as the prevailing narrative. And where's D-Hawk? Where's that uniter? Where's that opportunity to kind of do it better? Because I see this every single day. I see it in the fintech operators. I see it. I was having a conversation with Sherry Jiang earlier, the founder of Peak Money, and amazing lady doing amazing things. And what I enjoyed about that conversation is she was really thoughtful about how do you manage security and data privacy when 95% of your code is AI generated. That, to your point earlier about like the smart companies are the contrarians, is what I look for and what makes me really joyful to be a part of this industry. There's a lot of people that are not getting the credit, that are not getting the headlines, that are quietly doing their job, doing this sort of stuff. And so I'm manifesting the Timothy Chalamet almost as a metaphor for like, let's just pour some love on the operators here trying to do the right thing. So keep doing your job, guys, and let's make that the thing we celebrate in the industry and the thing we talk about a little bit more than just, hey, it's everybody from themselves, screw it, we're all going to die somewhere. Like, than boo hiss, the Sith Lord is back and they've raised their fees.
Simon, that is such a good manifesting that I'm just going to abandon the one I had and just build on yours, if you don't mind for a second.
Yeah, of course.
I mean, obviously we are speaking kind of on a larger sort of metaphorical level, but I see the same thing, right? Where it's like the thing that was so cool about that Oscar speech, and I remember that one specifically from Chalamet, was like he was pretty candid about like, I want to be the best at my craft just for the sake of being the best, right? And the thing that I struggle with a lot in fintech, and I think it's just sort of the nature of financial services to attract a certain type of person, but we are a little bereft of craftsmen relative to other industries, right? Like, I mean, you can make a lot of money being a doctor, but you don't go through all the work and pain and stress of being a doctor if you don't also care about the craft of like medicine and like the purpose of trying to help people. And a lot of industries, even ones that are generating a lot of revenue and making people rich, they have an underlying strain of craftsmanship that kind of carries through it and sort of helps define the culture of the people who work in that industry. And I worry when I see a lot of different parts of what's happening in fintech and crypto that we are losing a sense of like identity and culture and craftsmanship. And it's actually one of the reasons why I really admire companies like Stripe as an example, where it's like they'll do stuff that really is as much about craftsmanship as it is about anything else, right? Like there was probably a cheaper, faster way to do this, but we decided to do it this way because we care about the craftsmanship of this thing, just because we just choose to care about it. I want more of that, I want more like people who sort of go out of their way to try to be the best at something, even though there's really no economic reason, at least in the short term, to do that. And, the reality is a lot of the most profitable companies were built on the work of craftsmen who really didn't care that much about the money, but the money sort of followed as a consequence of them being so focused on being great at their craft. And I just wish we could inspire a little bit more of that in fintech, because I do worry about that the same as you.
So part of what I see my joy of being is like, I don't know how often you find this, but I bump into people in the industry who are doing it, but they're not the ones making the headlines. So this was just a moment to say thank you to all of them, because there are lots of people doing this. They just don't have the position that Timothy had on giving his speech. And I think that's why I'm manifesting it.
No, it makes sense, right? I mean, to use your Chalamet analogy, it's like all of the people behind the screen who don't get to get up on stage and give a speech at award ceremonies, but who care just as much about their craft. Those people exist in fintech and in crypto and in banking. And to your point, they don't get the attention that they probably deserve. So +1, Simon, to your manifesting that, and very much agree.
Yeah, we see you, we hear you. We're chatting to you all the time. We just happen to be the folks on the podcast, That's
Yes, exactly. Like we know the work you're doing and we appreciate it. Simon, I appreciate you. Thank you for carving out some time for me, even in the midst of all your worldwide travels. I know we're going to see each other in person at least a little bit this fall, and I can't wait for that. But until our next podcast, really appreciate your time as always.
Thanks, sir.